here's the one thing that's on my mind for the next 6 months, which goes out to 18 months. It can happen between 6 months and 18 months out. Powell decides to get stingy, right? We're looking at Western drivers now, right? Powell decides to get stingy and says, you know what? We can't get inflation to cool off. I'm going to skip a rate hike or two. And for some reason, beyond my capabilities, the stock market starts to crap out. And worse, the bond market starts to rally, not sell off as the stock market craps out. Gold will sell off as well. And there is something that I don't see, that we're not privy to, that Powell sees, that's really concerning him about the economy. And that's why he did ease before. And so he decides to get stingy. The market drops, 10%, 15%, who knows, something big, stocks. And that's when the cure comes in. And so the next time that there's a Fed easing, it could be yield curve control, which would be if the bond market wasn't doing well. It could be just a good old fashioned collapse in something that we haven't seen yet. Commercial banks, maybe Bank of America is going under. I don't mean to imply that, but let's pretend Bank of America is going under. Pretend that they are. And why does that matter? Well, it doesn't have to be Bank of America, but a huge bank is struggling, and that's too big for JP Morgan to buy. And the stock market starts to bleed, and Powell has to lower rates with the stock market down 10% because a U.S. bank is in trouble, and that U.S. bank has systemic risk with Europe, and Europeans' economy can't handle the strong dollar anymore, so he has to ease. And that's when we have our accelerant.